Hey all, welcome to ShareTreck. One of our subscribers requested me to check out a couple of companies, and today I'm checking out Invitae on their behalf. Invitae is not purely a CRISPR company, but still, I think we should not be totally focused just on CRISPR technology, but also we should expand our horizon a little bit so that we have got some risk diversification and also some potential of making sure that we do not lose out on other sectors which are doing well. So that said, Invitae is still a company that has got to do with the health sector. So let's take a closer look. So here we are at the website of Invitae. You can see right off the bat that the share is quoting at $4.02 as of close, and the symbol is NVTA on New York Stock Exchange. This company has got a whole lot of products, and many of them are already monetized. So I would like to first start off by looking at the leadership. Sean Emerson George, PhD, is the chief executive and co-founder of this company. Before Invitae, he served as chief operating officer at Navigenics, an early pioneer in personalized genetics. And before that, he has served on various roles in affymetrics, in vitro and molecular probes. He has a good educational background as well. And it's interesting to note that Sean was a consultant at McKinsey and Company, serving in the biopharmaceutical and corporate finance practices. Many alumni of McKinsey have been in startup companies in CRISPR as well as genetics field. So it's very interesting that he's from the same background. And also he holds a BS in molecular genetics from UCLA and a MS in molecular biology from UC Santa Barbara and a PhD in molecular genetics from UC Santa Cruz. So he's got all the right background and everything. And we have a whole lot of other executives out here, chief operating officers, financial officer, talent officer, etc. And the chief medical officer is Robert Nussbaum, MD. He leads Invitae's medical team. His background is from Harvard and MIT. So we have a good executive management out here. Now let's take a quick look at the product and services of Invitae. You would see that Invitae is operating in three areas. One is oncology, other is women's health, other is the rare diseases, and the fourth column is basically data and services. So the way I would describe Invitae, based on what I've read about this company, is that it operates in the genetic testing, health software, and health information technology space. To lead in this particular space, Invitae is working to aggregate results from world's genetic tests into a single, easy-to-use service that makes genetic information accessible to all who can benefit from it, always with patient consent. And over the past 5 years, Invitae has completed 13 acquisitions that have expanded its testing menu, lowered the cost of its tests, and improved its customer experience, and enhanced its ability to attract partners. The latest acquisition was somewhere at the end of 2021. We have this press release here from September 7, 2021, that says Invitae to acquire Citizen with two I's, CIITIZEN, to strengthen its patient-consented health data platform to improve personal outcomes and global research. So there have been 13 acquisitions so far, as I mentioned, and this is the latest acquisition that Invitae has made. Invitae is not yet cash flow positive from an operating cash perspective, and they expect to be so by 2025. They are planning to reduce their cash burn, and at this point of time, I think they needed to have a cash burn because they're putting the infrastructure into place, and also they're acquiring companies that will fit into the infrastructure that they want to build for the vision of the future, and that's where those 13 acquisitions came, and therefore there was a bit of a cash burn out there. But going forward, it's expected by 2025, the company would be operating cash flow positive. If you look at their platform revenue breakdown for Q1, the biggest contributor was oncology at $72 million, followed by women's health by $25 million, and rare diseases by $16 million. You can easily correlate this with the very first slide that I presented about their products and services. They fit exactly with this. Now, it's my feeling, based on some of the things that I had seen during my research on Invitae, data and services segment is likely to grow a bit more faster going forward, maybe in due course, mainly because my understanding is that when Invitae does analysis of any genetic sample at the request of its customers, it follows a uniform process. It doesn't have a customized process for each client. They form a uniform process which is much wider. And in the process, what they do is they gather all information available about a given genetic mutation or variation from every possible source and build it into a database. And as they keep on doing more and more genetic tests and providing reports to their clients, I'm expecting that this database is going to grow in value. Not only will it enable Invitae to have a much more detailed and nuanced report for their client, but also it could be of value to other organizations which are looking at leveraging on accumulated information in one spot, because I suspect that Invitae will also probably put mechanism in place to check the accuracy of their reports and build some metrics which can inform potential users of how effective their diagnostics and probability reports are. So that's my opinion based on whatever I have read. I'm going to show you a small video clip from Invitae which talks about collection of information from all sources.
Invitae has a couple of competitive advantages, but both of them focus on efficiency. So my lab team has developed a factory mentality to process samples the same way every time with high quality and high accuracy. And then on the software interpretation side, which is typically the hardest part of scaling a genetic test like this, we have an army of software engineers and geneticists whose job it is to remove the manual processes from the report generation.
Invitae is solving for multiple layers of complexity. The genetics itself is complex. Multiple genes map to multiple phenotypes, multiple pathways can be involved in various disorders, with new information being added all the time. The information that's available is non-standardized, it's incomplete. In many cases, the information available in the clinical literature and in the publicly available databases is incorrect. All of that information needs to be quality controlled, standardized, and appropriately mapped for anybody trying to do what we're doing. While next generation sequencing technologies are incredibly powerful and have a promising future in the space, using them today for clinical genetics is a lot harder than I think most people appreciate. There are very complex variants that are not particularly amenable to the technology, and these types of variants tend to be very important for clinical diagnosis. We've had to develop a lot of our own proprietary software to both call and interpret some of these regions to really use the next generation sequencing technologies for all of the variants that are important. Has required a lot of development, a lot of effort on our part. The greatest area of complexity is in the clinical interpretation itself. So it's one thing to generate a large list of variants that may or may not be associated with the patient's disorder. It is quite another for the clinical team to sift through all of the variants that have been seen before, and as is usually the case, many variants that have never been seen before, and use all of the available information at their fingertips to present this to them in a way that is actually scalable, a way that doesn't require teams of hundreds of people pouring through literature, checking databases. To really get the clinical interpretation right and to get it at scale and cost effectively is a large part of the development that we've done.
We've been working really hard over the course of the last several years to develop something we call a clinical report optimization process, in which we have software engineers working side by side with genetic counselors and clinicians on actually automating a lot of the things that they do to provide them support. So from the time we receive the data from the DNA sequencers on a particular sort of patient sample, we then have a team of people that are using tools to be able to go out and look at everything that's known in the world about that particular gene and about those particular mutations, and be able to put that into an expert user system that allows them to get the most accurate interpretation of what that genetic information means for that particular family and that particular individual.
Invitae has done that is truly innovative is leverage digital technologies and tools to make genetic testing more efficient and more actionable and effective in treating patients.
We like to think of ourselves as really focusing on opening up a whole new technology into a whole new industry. Our competition is not really with other genetic testing companies, it's with the lack of genetic testing. The vast majority of individuals in society have never had any genetic tests, know nothing about their genetic makeup, and yet genes are fundamental to our health. We think of genetic diseases as rare, but in fact 5 to 10% of the population actually suffers from some genetic condition, many of them undiagnosed.
The way we think about our engine for growth is really in 5 components. The first is content, so what genetic tests are available. We feel it's important to have as comprehensive a menu as possible, so we are first pushing as much content as possible, making it available and accessible to clinicians and their patients. Second is the customer experience, so from start to finish, from deciding what test to ordering the test, to the answering questions during the testing process and then following up when the results are ready. We feel making a world-class customer experience is essential to growing our business. That in itself will drive traffic to our site, to our tools, and to our testing menu. We'll also attempt to drive traffic ourselves. We'll try kind of traditional models in the space, and we'll also be looking to some non-traditional models to drive traffic, work with advocacy groups, for example. We then feel it's essential to attract partners to both enhance all of the other 3, whether the content, the experience, or driving traffic. Pushing on those 5 components, driving that engine, driving that growth engine, is how we'll achieve our mission of quite literally getting genetic testing accessible into the hands of billions of people worldwide.
Here is a slide from their Q1 2022 presentation, which shows us clearly that their cash burn has gone up from $112 million in Q1 2021 to $169 million in Q1 2022. And also, if you look at their gross margin, you'll find the 3% drop in their gross margin as compared to same quarter last year with the first quarter of this year. So things are, the management seems to have recognized the fact that for them to last their cash and marketable securities, or so as to say that use the term increase the cash runway, they need to curb a little bit of their expenses. Now, if you look at the general and administrative expenses, it's almost gone up by $20 million. That could be additional people, staff, recruited. So the company is planning to become operating cash positive by 2025. The loss per share has also gone up compared to Q1 2021. So this company would need a little bit of investment, but compared to all the other genomic companies that we are looking at, you can see that these guys have already got revenue streams in place. It's just a question of optimizing their cost base, putting their infrastructure in place. And as I mentioned earlier, their database is going to be more valuable as time goes by. And with the acquisitions of various companies and being able to integrate with the overall digital healthcare system, this company has got a lot of good prospects going forward, in my opinion. In this slide, we can see that they have used almost $500 million for acquisitions in the previous year, in the last 3 quarters. So that's a big amount of spend. So the acquisitions might probably be put on a pause going forward to expand the cash runway. This is a very nice graphical representation of their strategy, where they are today and where they are going. So they started off with genetic testing and creating a genome network by making a lot of acquisitions to build various components. And now they are in a position to share genetics on a global scale to diagnose more patients correctly earlier and bring therapies to their market faster. And their objective is to go further and become a genome management company to provide information services that inform genetic healthcare throughout life at all stages for all ailments. So that's their journey. So there are a few things I'd like to mention about the financials out here. If we were able to invest in a company regardless of the time frame, and that ultimately will get profits, then definitely you can invest in any company. But unfortunately for all of us investors, the main thing for us is there's a time horizon that we look at and the rate of return that we look at in order to take the risk of investing in the shares. Because if we don't want to take any risk, we can just put it in a fixed deposit and get interest where the capital is safe, plus you get interest and you beat inflation. The reason why we want to invest in these companies is to do better than what we would do with a low risk investment, get our capital and get profits as well. So from that point of view, here are some facts about Invitae. At the end of 2021, Invitae had $923 million in cash in its balance sheet. And the previous year, as we mentioned, they had spent around $680 million, I think, in acquisition. We just saw the last 3 quarters, so it is more. And for this year, the target for spending for acquisition and everything is around 600 million, including all kind of expenses. This is an attempt to rein in the cash burn. So they're not spending as much as they're not planning to spend as much this year as they spent in the previous year. So that is all and good. However, this 600 million target can get a bit damaged if they did not meet their sales target, revenue target, or if they overshot their existing expense target. Either way, it can go and hit their balance sheet cash balance. And keeping that in mind, the company this year in March, the company entered into an agreement for sale of equity shares in a staggered manner as and when required. And they have targeted $400 million worth of shares that can be sold by the management at any time in order to shore up their cash balances. So the way I understand the company's strategy is that they recognize they need a longer cash runway. So they are thinking of reducing their cash burn by limiting their expenses. At the same time, they are preparing a contingency plan, which is Plan B, that is to have the equity sales agreement in place so that they can have at least up to $400 million of additional cash runway in case they end up in problems with their execution of their plan. So this brings to mind the potential of equity dilution. Whenever equity dilution happens, the share prices fall. They also have employee compensation, which is stock-based. So that's also going to creep up into the total number of shares that are in circulation. So I would rather be careful out here. We have the example of Palantir, which is heavily into stock-based compensation, and their shares have not been able to look up. They keep on going down. So we'll have to watch this carefully if we are to invest in this company. One of the things that caught my attention was they had in their initial slide about their service called Fibroblast. I looked up what Fibroblast is. Fibroblast is basically a skin tightening technology. So we have cosmetics out here, and when it comes to cosmetics, there is a very good potential to make money out there. Of course, this is going to be a portion of sides along with the main course, which is diagnostics. But this can also give some steady revenues, and pricing would also be something that will be more flexible in the Fibroblast and give more. This is just me speculating. So that's my thoughts. And now let's go and have a look at their charts and do a little bit of technical analysis to see where this company was and where it has reached and where it is likely to go. So I have here the chart of Invitae. It's a 2-hour bar chart. So if you look at the 2-hour bar chart, you can see that we are in some kind of a bear channel and we are continuing to go down. Let me look at various time frames and see which one suits us better. I'm looking at a 1-day time frame. Again, we are as low as we have ever been when it comes to Invitae, and it's really a very interesting time for Invitae to actually talk about issuing additional shares, because that's going to put more downward pressure on the share price. Right now it's quoting at $4.02. Let us do some technical analysis out here and see if we can form any conclusions. I'm going to go into a 4-hour time frame and see if I can make any sense out of this. So basically we are in a bear channel. I'm going to draw a trend line out here. So this is the bear channel that we have here, and we have 3 touch points here. Right now we are above it, and we have got the 50-day exponential moving average, which is being a resistance for our chart here. I'm going to magnify the chart. Just please bear with me while I magnify the chart. Each of these candles is a 4-hour candle, and you can see that there has been a lot of consolidation that has started somewhere around 11th of May, and they gave us information about their equity plan somewhere in March. So let us see what it was looking like in March. So they made the announcement somewhere in March, and since then the shares have fallen further. So around March it was at 7.54, now it is at 4.03. It would need a lot of conviction to invest in this stock at this point of time. Of course, I agree that the entire market has been down and there is a bearishness out there. We also have to recognize that this is an environment of raising interest rates. It's going to be very difficult to find traditional finance. It's a good thing that Invitae has tied up $400 million worth of share purchase contract. But overall, as a small retail investor, this will be, in my opinion, a risky stock at this point of time. And high risk has got high rewards as well. So when I look at this chart, I don't see much strength in place. I can assume that what we have here is a consolidation. I can even try to imagine that we have some kind of cup and handle formation that is likely to happen. But when I look at the overall macroeconomic situation, the Russia-Ukraine war, the supply chain shortage, the political uncertainty with the midterm elections coming, and also the fact that they have $400 million worth of shares lined up to be put into the market, I'm a bit concerned. And on the positive side, I think if they're going for acquisitions in this kind of environment, they would be able to get a really, really good deal. And probably they may not need to use the equity share dilution route. But overall, at this point of time, I'm not very bullish on Invitae. And it has a long way to go before it can pick up in terms of where the market is. If the market was normal, I think with the revenue generation, they would have been quoting somewhere around $7 or $8. But we are very far away from normal markets. There's going to be more interest rate hikes in store. So I would like to finish this presentation saying that probably Invitae is something for someone who's a high-risk investor at this point of time. And because in my opinion, we are still somewhere close to the bottom. So I wouldn't be spending any money right now unless it's a really, really solid company which has got dividends and which has got products in place and it's got a lot of cash in its balance sheet and it has got capacity to dictate price to the market and be able to pass the additional cost of raw materials to the customer. If a company is like that, then I would do dollar cost averaging, but I don't think I would do dollar cost averaging with Invitae at this point of time. We have to look at this share on an ongoing basis to decide whether it's time to start dollar cost averaging. This will definitely improve, the share price will definitely improve maybe in the fourth quarter of the year. How much it's going to improve will also depend on the kind of acquisitions the company would have done by then and how their sales performance has been with regard to their target for the next 2 quarters. So I would suspect that for the next 2 quarters, we'll have to watch this company and maybe we'll get further opportunities to invest in it at a later time. And it's my own personal preference that I don't like to catch a falling knife. I'd rather dollar cost average on my way up than on my way down. So if it's in a bullish channel, that will be a right time for me to start dollar cost averaging. Please put your own opinion in the comments below and let me know what you think about it. So friends, this was a very quick look at a company that I had not looked at before. So it was a very quick analysis. I've tried to gather whatever information I could and keep this video as short as possible. Please let me know what you think about this. If you like the video, don't forget to press a like. And if you're not subscribed, please subscribe and join our community and for everything related to CRISPR and genomics and stocks in general. Bye for now.